Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that clearly we have a market which is in a very strong uptrend, fueled by the fundamentals that are currently in the market, mainly the uncertainty coming from tariffs. As we know, gold appreciates in periods of uncertainty, and that is exactly what is happening. The market is in a very strong uptrend, fueled by strong institutional buying. And we will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis for gold. But for now, let's keep in mind that here in the monthly, the market is in a strong uptrend, and all this uptrend is coming as a rejection away from a strong historical structure level. In fact, this zone was already acting as previous resistance. From here, all these previous rejections to the downside were created. Every time the market tested this zone, it got rejected to the downside. Then the market broke above the level. And as we know, previous resistance, once it is broken to the upside, becomes support. The market retested the previous resistance, turned support here, and is currently in the process of rejecting it to the upside and creating this massive monthly uptrend. Dropping down on the weekly time frame, what do we see? Now, here in the weekly, the pattern is very clear. We had the impulse, then the market created this consolidation in the form of a triangle formation, or in other words, a wedge, depending on how you like to call it. It simply put, a wedge or a triangle formation is a situation in which you have a strong impulse, then the market moves to the creation of lower highs and higher lows at the same time. And then after that, the next logical step is usually the breakout to the upside, which is in fact exactly what the market did here. So in a situation like this, what we have to keep in mind is that we are currently in the breakout phase with the creation of an uptrend away from this consolidation area. And what we can notice is that so far, also here on the weekly, the market has been creating a series of weekly higher highs and higher lows. The last step was the creation of this new higher low, so higher than the previous one. The next logical step would be to see a new weekly higher high, so higher than the previous one, for the continuation of this weekly uptrend. We can also notice that as we have an impulse here and a correction, if we want to measure this correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, what we can notice is that the market has already retraced exactly to the 0.618 of the Fibonacci taken on this impulse leg, which in this case was also lining up perfectly with this previous level of weekly resistance from which this red candle was created, which after the market broke it to the upside was turned support. So actually we have confluence of support here, which the market is currently rejecting to the upside and from which we could expect more potential bullish continuation. Dropping down on the daily time frame, what do we see? Now here on the daily, I did speak about gold just a few days ago when the market was around this area, and I explained all the reasons for which I was expecting this rejection to the upside, and that is in fact exactly what the market just gave us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But at the moment, what do we have? Well, before we dig deeper into the technicals here, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing on gold. Now, what we can see here is that in the last report, we have seen a slight increase in net positioning. We went from 161k to 163k net positions. So in the very short term, it seems like institutions are once again moving back to the bullish side. So essentially they're expecting after this correction more potential bullish continuation. Now in the long term, the positioning is already aggressively to the bullish side with 238,000 longs compared to only 74,000 shorts from an institutional perspective on gold. We can see how the maximum that they ever had was 302 with 356k longs compared to only 53k shorts. So if we look at that data, we can notice how now they have decreased a bit their exposure after this huge push to the upside, meaning that profit taking has already happened during this uptrend, but the positioning is still aggressively to the bullish side. So let's move back to the chart here. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description so you never miss new updates. Now back to the analysis. So in a situation like this, what we have is strong support all across this area. This was the previous level of daily resistance from which this red candle was created. And as we know, previous supply and resistance after it's broken to the upside becomes demand and support. So all this area is a strong demand and support zone, inside of which there is a possibility to see net positions starting to rise again. And that means that institutions start to again move back to the bullish side for gold, potentially anticipating more bullish price action. So all this area here could be an area inside of which institutions load up more longs. Now, if that will be the case, what would I expect? Well, as usual, trading is reactive and not predictive, as my students know very well. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from the strong demand and support zone. That definitely wouldn't surprise me. All this free education and analysis that you see me share on YouTube is actually just the tip of the iceberg. If you want to learn more, I really suggest that you head over to the website linked in description and you will be brought to my website. Here, I really put together the best trading program on the planet. You can gain access to all my courses from the really basics of charting to the more advanced topics like building portfolios of automated strategies using the MQL programming languages, building portfolios of strategies, and much, much more. You have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one mentoring directly with me, the COT data software, which often you see me use in my free analysis. And this is our all-in-one program. So you gain access to everything immediately. You gain access to all my EAs. So essentially you have access to my strategies, which you can then personalize to your own preferences. You gain access to the trading show. And here you basically can see the presentation of each and every one of my EAs. So each and every one of my strategies, which you will have access to. You gain access to the trading show, which is essentially a live stream of all trades as they're happening on my account. So opened, closed, managed, everything in real time. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign up process. So I really suggest that you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.